As we speak. ZA Enterprises yesterday did see a sharp slam dunk, but Plutus Wealth Management, they bought close to 75 lakh shares in the company at around 191. So that one is up and about in today's trading session. A few other stocks in the broader markets that deserve special mention. There's small finance pack. The stock is up close to around 7%, but this week it's up more than 15%, so that's seen a good run. And Tanla as well as Electra Green Tech. But this week, these stocks have still done well, and today they're building on to those gains. So yet again, the broader markets, the action's out there. More than 2,000 stocks advancing, but just 400 stocks that are declining.
All right, 20 points on the Nifty basically. I think we mentioned CDSL, right? CDSL, I think there is a block because volumes are through the roof. There you go, at the bottom of the screen, 4% lower. KPIT Tech is down 2%. Tata Chemicals is down 3%. Tata Chem, of course, I think this is the soda ash story playing out. Tata Chem yesterday closed at $1,000, now in 3 digits. Persistent, of course, there is the downgrade which we highlighted. HBL Power, we were just discussing with Mitesh earlier, down about 2%. This is, follow-through or lack of follow-through moves from yesterday. This JBM Auto has had a frenzied, feverish move last few days. That is starting down 1.5%. And I think HDFC AMC is down a little bit as well. By the way, market breadth in terms of overall advanced decline is pretty solid on the way up. Lodha is picking up from where we left off, and Mitesh weighed in on this just before markets open. Another 4% on Lodha after yesterday's move. Stocks at about 703. KEC we mentioned with a 5% gain. Anupam Rasayan 6%. Varun Beverages is coming up with about a 2.25% gain. APL Apollo is up about 3.33%. Scient is up about 2.25%. I think with Scient, this IIF, I think one of the brokers met the management, and there is some, I'm not sure if there is new guidance, but reiteration that there is, demand environment for them remains pretty solid and, good. So I think the stock reacting to that. Gland is up about 2.25% or so. And we've got Sula, which is up about 2% as well, 458 or so on Sula. So that's basically what you have on the index. The Nifty is not doing very much. You just got about 10 or 11 points with us at this point in time. But it's basically the mid-caps and small caps which are really have been the stars for a while. Names like Suzlon, Canara Bank, or etc. are seeing some profit booking as well. So it's both ways. Although, the bulk, the thrust is on the upside with many more stocks on the with gains as compared to those trading lower at this point in time. Okay, well, let's get a technical perspective, right? We are at all-time highs, almost there. But how's market looking? Is it good for more, or there will be some hesitation, some consolidation? Atul Suri is with us, Chief Executive Officer at Marathon Trends PMS. He's with us here in our studios as always. Atul, good to have you with us here. Thanks very much.
Thanks.
So you heard the question. What from here, basically?
See, I think, Prashant, it's just global in nature. It's not just that India is doing well. If you look at global markets, there's a massive repair job, and we've been talking about it. It's a lot of markets are almost breaking out of 52-week highs. Look at NASDAQ, that's driving. S&P 500, that's going there. Japan, doing pretty good. KOSPI, Taiwan. So there is a whole host of markets, and this is a repair of the damage done last year. And this is global in nature, barring a few countries like Russia, etc. But this is global in nature. So India also is getting to new highs. The difference is that it's not just 52-week highs, they are lifetime highs.
Correct.
And that is a very, very big difference, because even if these markets are breaking out of 52-week high, they are good 10 to 15% from lifetime highs. So that really sort of reiterates the position of leadership that India has. We had this feeling of outperformance very early in the year, but then after that, due to some events, the luster was lost. But the good part is that India has recovered, and it will again be one of the first few markets to break out to lifetime highs. And there's a lot of difference between lifetime highs and 52-week highs. Lifetime highs means that there are no resistances, there are blue skies. So I think that India is getting there, and I still feel that we have about a good 15% upside from where we are. And I think that, a lot of people are sitting in cash, and I've been saying that for quite some time, that please be invested, top up if you have to, because I think that this is a global repair that's happening in equities after a big pain last year.
A lot of people, once weeks ago, still in a state of,
absolute
bit of a disbelief, right?
Yes.
Markets don't top out when
absolutely.
that kind of a state.
famous line by Soros, bull markets are built on walls of worries. And that is very, very true. And see, where is the froth here? Where are the excesses happening? There are no excesses. Do we have that GameStop kind of scene last year? Do we have those SPAC kind of situations? We don't have any of those
Maybe
kind of
single stocks in mid caps and small caps, but that always happens, and then they get corrected themselves. I mean,
there are a lot of people for whom that is their profession and their bread and butter, but it's not the market as a whole. And that is why you'll find that the angst was a month ago was, hey, this is just very limited to few stocks, few sectors driving. Hey, but look at today or look at last week. The breadth is really improving, and that's, I think, very important. So no euphoria is actually good. But personally, I'm extremely bullish, and I think that India has really, really, pounded up on the table and said, hey, this is leadership status. So as an investor in India, why should you not be in equities?
Okay, that is the most bullish I've heard you in a while, actually.
No, I've always been.
More bullish than last time you came here.
Okay,
what has changed since then? You changed your diet or something?
No.
But 15% upside is big, right? Given the rally that we've seen up until now.
Sonia, I've been saying that, not that I just don't want to talk about the past, but like say 21,500, I've been on record saying that since, and it got a little messy post that whole Adani issue, etc. But I think that India is heading there, and we are showing absolute character, breadth, leadership, all these things are there. So I, for one, have fully invested. I don't even have 1% cash, let's be honest.
And where are the leaders now? Traditionally, it's always been banks so far, right? IT has been underperforming.
Absolutely.
Do you think things could change?
No. So what we did was we realized that, hey, the sector indices that are constructed are very poor.
Yeah.
I'll give you an example. The best performing theme playing out today is defense, right? But we don't have a sector. It is somewhere in the PSU basket.
Yeah.
So what we did was we created about 40 thematic sector indexes. So clearly there are 4 or 5 very big themes playing out in this market. Why I point out defense is that defense is not just doing well this year, it was also one of the best performing last year. Yeah. And the numbers are supporting it. So what you see, as a trend follower, there is a very, very big play happening in defense stocks. Second is not a very glamorous sector. It's your electrical equipments. Again, cap goods is a very big universe. But if you look at some of the electric equipment manufacturers, you'll find they're coming out with very good numbers. What has happened is that over the last 8 to 10 years, a lot of companies in these sectors have been wiped out. And what is left is a handful of them. So when the government orders are coming, the push on infra is coming, you'll find that these guys are disproportionate beneficiaries. They are all screaming away at lifetime highs. Similarly, you will find in construction, infra, they have not moved for a decade.
Yep.
They are under-owned, under-loved. So these actually become very good themes for larger trends. And that's why we personally prefer to be overweight here. Those which were leaders 2 years, 3 years, they are famous names, they are marquee names, they're so-called quality. But you'll find that they don't have trends right now. The trends have moved. Hotel stocks, that's another very, very interesting place. When did hotels take leadership status? Even in auto, I think auto is a very interesting sector. But more interesting is the whole ancillary space, where there are some of the electric plays that are playing out. So to thematically look at the market, I feel that there's immense leadership. You will notice it in breadth. It may not get reflected in the index per se, but there is a lot of trends playing out.
Well, there's a party going on in the broader markets, Atul, and if you're participating, good on you. And as you're saying that you're not sitting on any cash, so fully invested. Just want a time frame, this 21,500, how long could it take?
I think the markets will surprise on the upside, because I think globally, I feel that markets will surprise, and I wouldn't be surprised by the end of this calendar year. So that's just 6 months, which is very big, because the big issue that is happening, what I am really seeing is the cooling off of commodities. See, our biggest bet, but last year, what was the problem last year? If you find that all asset classes were negative in 22, except one, commodities. And 23 is just the opposite. All asset classes, whether it is equities, whether it is bond prices, whether it is even cryptos, there's only one asset class that's negative, and that is commodities.
So let's talk more about commodities. Crude prices, where is it headed?
I think they are headed much, much lower. And I think that crude actually is one of the most manipulated assets in the world. It is a pure political play, a play of egos. And crude, in spite of all attempts by Saudi, if you look at it, they're doing everything. They're almost like a one-man show in OPEC Plus, trying everything to cut production unilaterally and go ahead. Yeah. But you will find that crude is still not going up. The day they do it, it goes up $5. but a week later, it makes a new low.
Yeah.
So essentially, this asset class is telling you it wants to go lower. My target for crude is around 65. That's Brent crude. And I think that will have very, very wide reflection on world economics, because it has created chaos and mayhem. I mean, if you look at our neighbors, you look at Pakistan, Sri Lanka, a lot of African countries, these countries have been destabilized thanks to this crude prices. So I feel that commodities per se, which are one of the biggest cause of inflation, fear of inflation, which led to higher rates, which really created the mayhem in equities. I think if commodities remain cool, which I think they do, that's what they seem to me right now, I feel that this will be positive for equities and economies as a whole.
You know, Azul, you mentioned electrical companies. We got a company joining us in just a bit. KEI will be with us, and that'll be interesting.
Disclaimer, it's a part of my portfolio.
That's done phenomenally well, I mean, over a period of time.
You want to share some more portfolio?
No. Just that you said it. Better be safe.
We should have a tease up. So, I mean, what else? Real estate still looking...
Real estate, Prashant, has its bits and pieces. But at the end of the day, you know, when I talk about trends, I'm talking about a 1, 2, 3 year kind of up move that there is happening. So real estate has been very good, probably the best performing in the last 3 months. But by my standards of qualification, it's still not there. Like I am extremely overweight defense, electrical equipments, engineering, infra plays. I know these are the areas that I am, because what we call the old economy. As I said, it is perfect setup. You don't do anything for a decade. You're under-owned. Even at the corporate level, very few players. My models are telling me that, hey, you know what? That the whole cycle is turning, the whole infra, the whole capex circle. I'm not an economist, but we have to hear what our models tell us. My models are clearly telling me that things are turning around in this place. And if they do, I feel that these guys are going to be disproportionate beneficiaries. And it's showing in the quarterly numbers to confirm. It's not just storytelling.
I know you have been a big bull on autos for a very long time. It's played out beautifully, right? But what next? Is there more upsides in the auto stocks? Or have people missed out on the rally?
Yeah, and even in that, you know, Sonia, as I was telling Prashant, that autos is one. We know these famous 5, 7, 10 names. But look at ancillaries. I think ancillaries is a very exciting place. You know why? Because of the electric focus. Whichever, even if you see some of the companies, you mentioned some, you know, like these are part of our portfolio, because we find that wherever there is an electric slant or a move towards electric mobility, I think that is doing very well. So auto ancillaries is a very big basket, maybe a few hundred stocks. You can't have that. But even in that, look at the electric angle. I think that theme is playing out, and not just India. Again, it's happening globally.
So you're not looking at the auto OEMs. You feel that that's an overcrowded trade now?
I feel so, and I think
Tata Motors of the world.
Yeah, I mean they will do well, but at the end of the day, my job is to create alpha, and you know, to look for that alpha, I would look at those niches or those specific trends. As I said, there are a few hundred stocks. At the end of the day, how many auto stocks can I have? So I would rather go into ancillaries, and in ancillaries also, I would look at the electric side of it. I think that you can see it. The market, the screen is telling you that they're doing very, very well.
And you know, Atul, what about the IT index? You know, the IT stocks, they've been fairly stable. They're not corrected much.
In fact, they've been disastrous. The large cap IT is one of the biggest drags on the Nifty.
Yeah, they haven't moved much is what I meant. And Nasdaq is up close to 30%, you know, in the recent past. What's the view out there? If they've been disastrous, do you see some downside risk on the IT stocks? Because that's a large part of the index, the Nifty.
Yeah, they have been one of the biggest drags. Because if you look at banking, which is in sector number 1, it's almost at lifetime highs. It's pretty much keeping in step with the market as a whole.
True.
But IT large cap is actually one of the biggest drags on the market. And even when you look at Nasdaq, you know, you'll realize that, hey, you know, it's not the breadth in the Nasdaq that's playing out. It is, again, just as I mentioned, electric and autos.
The top 6.
In tech also, it is AI. Right? So even in the Indian market, you'll find that there are some companies, some mid-caps doing very, very well. So you really have to, as I said, look at themes that are playing out. And once you get these themes, I think that's when the big trends play out. So even in tech, it's the whole AI thing that is really playing out. And that's changing lives very, very fast.
Okay, forget all this. It's season time. Where are you traveling now?
Oh, okay. Yeah, this time I'm doing something adventure. I'm going to Ladakh, actually. I'm going to hike. I'm going to Ladakh. So that's going to be a 9-day trek.
Is it your first time in Ladakh?
Yeah, absolutely. So, you know, we are a largish group, and I'm the kind of organizer. So that increases the pressure apart from...
I was reading somewhere that they're actually now opening that, places which were inaccessible.
Yes, the China border, because north of Pangong was actually restricted area, and that's when the China border. So now they've started tourists to go north of Pangong. Pangong, of course, is that very famous, beautiful lake. Must do photo op kind of things, you know. I think Three Idiots was the movie where, that's what made it famous. But north of Pangong was restricted, because that's where...
All right, have a fantastic holiday.
Have a safe one, actually.
Oh, yeah, I know.
That will be a tough one for you.
Fingers crossed.
Thanks very much.
Thanks a lot.
That's technicals, 15% more to go as far as the Nifty is concerned. And, broader markets and these specific sectors is what you need to be focused on, as Atul explained. The Nifty is absolutely flat, just 4 points or so. Let's actually focus on one stock, CDSL, where there was that block that we put out. Nimesh is standing by. He's got details on what went on, who sold, who bought, and what's the behind the sort of story, the backstory for this block deal. Nimesh, over to you.
Hi, Prashant. So today's large block in CDSL was largely done by BSE, Bombay Stock Exchange. So they own 20% stake in CDSL, and today via block deal they have sold 5% stake. So the entire transaction is close to 550 odd crores, and after this transaction, BSE will continue to hold 15% stake. I have a confirmation as well that yes, Bombay Stock Exchange did sell the 5% stake in CDSL. In terms of buyers, I guess it's a mix of both domestic and FIs who've participated in the block deal. Some hedge funds have also bought, is what I understand. I believe this 5% stake in which BSE has sold is largely a regulatory requirement which they wanted to do before October of this year, and hence they've sold this 5% stake. Not sure what's the plan going to be for BSE going forward with the remaining 15% stake, but the fact is that I guess the street will like the fact that BSE has now started monetizing its stake in CDSL. Remember, for a long time they've been holding 20% stake, but that was not given any value as such because it was a holding stock. Now that they've sold 5%, I guess street will start penciling some numbers to that stake still as well. As things stand, final confirmation that yes, BSE has sold 5% in CDSL today via block deal, and a couple of domestic funds and some hedge funds were buyers in today's block.
Okay, all right. Thanks a lot for that. Nimesh, BSE actually is the stock that you should be looking at. CDSL is under some pressure, but BSE, that's the one that's going to be getting the money because they have sold some stake. In a short while from now, that stock should be up for you on the screen. I think there'll be a positive reaction on that one. Well, that'll come up for you on the screen, though CDSL is under some pressure. Well, let's move on then. KEI Industries, that's a stock on our radar. The company reported a decent set of numbers in Q4. They are guiding for 16 to 17% revenue growth for the coming year. To discuss how demand's outlook is shaping up and how's the order pipeline as well looking, we have Mr. Anil Gupta, the Chairman and MD of the company, who joins us on the show. Hi, Mr. Gupta. Good morning. Thanks so much for joining in. Well, you had guided for around 16 to around 17%, and that's pretty good. But given the fall in commodity prices, there could be some tapering off in terms of prices. Do you still stick to this revenue growth of 16 to around 17%? And if that's the case, then will you be factoring in higher volumes than you factored in earlier because pricing has come down a little bit?
Good morning, Nigel. I guided for 16 to 17% revenue growth based on certain, price levels persisting at the end of Q4. Now, if the price, but we are still sure that we will be able to maintain a volume growth of 16 to 17%. If the prices goes down considerably, then we are more concerned about the volume growth instead of that just the value growth and also margins. So our effort will be to maintain the volume growth and the EBITDA. That will be.
Okay, Mr. Gupta, so pricing has come under some pressure because the input costs have cooled off. So volumes you're guiding for around 16 to 17%, but on the revenue growth, could you give us the number given the softening we're seeing at prices at current reckoning? What kind of a value growth would it mean? And also lower input costs and operating leverage will be good news for margins. What is the margin number you're looking at?
See, at the current level of prices, I still see a revenue growth of 15 to 17%. We should be able to achieve. So far as margins are concerned, our guidance will be anywhere between 10.5 to 11%. Because so far as lowering of the raw material prices are concerned, but we always have inventory in the retail stock, and we always have booked orders, and we always have competition. So we are a little conservative in giving guidance, but definitely we'll try to achieve 11% EBITDA in this year.
Okay, 11% EBITDA in terms of margins this year is something that you can achieve. You also have a major greenfield expansion of 800 crores, Mr. Gupta. And first of all, welcome to the show. Thanks for joining in. There's an 800 crore expansion that you're looking at. Tell us a little bit about that in terms of a timeline, execution, and also what is the revenue potential from here?
This expansion will be anywhere between 800 to 1,000 crore. It is coming in Gujarat, in Sanand industrial area of GIDC, where we have already procured the land, and construction activities are likely to start in July. And it is still at the planning stage for the architectural point of view, and we envisages a turnover of around 4,000 crore over 3 to 4 years from after it is operational after 2 years. Then it will give a revenue of around 4,000 crore a year, but in a graded manner over a period of 2 years. And then by debottlenecking, it can go up further to 5,000 crore. It will be a mix of cable, HT cable and low tension cables.
Okay, so you're saying 2 years down the line. So maybe from FY27 is when you're expecting a 4,000 crore annual revenue from this greenfield project?
I think it will be an FY, 24. No, FY26. It should start.
Okay, okay, got that. And in your EHV segment, there was a degrowth in revenues of almost 25%. You had spoken about some delays in large orders. Can you tell us what is the status currently? I think your order book is about 850 crores. If there was a degrowth earlier, do you think those orders will get executed in the subsequent quarters? And what could the quantum look like?
Certainly, it will be executed in this year. And there is a good, order pipeline in extra high voltage cables. And we expect a revenue of more than somewhere around 600 to 650 crore in this segment. In this financial year, we have a good order book and good pipeline.
Mr. Gupta, just to kind of put that number into context, so you buy, what will the total size of the business be by, say, FY26, sir?
I think by FY26, we should reach around, 10,000 to 11,000 crore rupees. But once this Sanand plant starts, then it will be a major pickup. And because we are focusing on major exports from there, because at the moment we have a lot of export opportunities, but we are not able to build it up because of the capacity constraints. We are hyping up our capacity in our existing plants by debottlenecking and by doing brownfield expansions. And from that, we will get around 15% revenue growth year after year, this year as well as next year.
So you ended with about 7,000 crores in FY23. You're saying by FY26, post the revenue from this new Sanand facility, you'll go up to about 11,000 crores. Should be round about there.
11 to first year 11,000 crore and then gradually scaling up that facility.
Okay, got it. Mr. Gupta, just to step back a little bit, I wanted to understand from you, what is the big, which business segment is the big opportunity going to come from for you? Because globally, what one is reading is that the main problem, right? I mean, if we're going to see a lot more renewable capacity being set up, coal-based plants, etc., take a backseat, the big sort of not problem, but the delay is in getting the power from these renewable plants to homes where the power is needed. And that requires grids, and that requires cables, because these are not, you need to replace one coal power plant. You need, you need more than a few renewable units, be it wind or solar or whatever. And these are usually located not in the center, but slightly away because you need a lot of land. So connectivity requires a lot more grid, and that requires cables. Is that something which we will see here in India as well? Is that already happening? Could you give us an update?
Of course, this is happening, and the major cable requirement is coming from solar power plant and also from the power distribution side. A lot of distribution strengthening is being undertaken by all the power distribution companies. Apart from power, we see a good demand coming up from industrial sector, refineries, steel, cement, and also the infrastructure like railways, like metro railways and suburban trains. Then construction sector is also picking up, and we are seeing a good demand coming up from that. In overseas sector, it is the solar power which is driving the growth, and also the power sector. A lot of cables are needed overseas also in the power sector, especially in America in the infrastructure rebuild.
Okay, all right. So the theme is looking up. KEI Industries is headed in the right direction. Mr. Gupta, I wanted to ask you about pricing. Now, on the retail-facing business, on the retail side of things, I understand that your pricing is at a bit of a discount in comparison to your peers. You could correct me out there. And you could tell me, what is the strategy from here on? Do you look to bridge that gap? Because on the margins, you're looking to bridge that gap. Margins as well are relatively lower. So on pricing, what is your strategy from here on? That and also exports, as a percentage of your revenues, I think they're in early teens. Where do you see this number headed?
So first of all, margins in the retail side, we are trying to improve our margins by approximately 1% in our house wires every year after year, and so that will bridge the gap between our peers in next 3-4 years. Regarding exports, what was your question about exports?
On exports, it's around 10 to 12%, I think, right, as of now. So where do you see this number headed? Given that you're saying from 7,000 crores, you'll go to 11,000 crores. So what will the contribution be from exports? And also, sir, you have commented on margins, but on pricing, you've not commented. Will you continue to remain at a bit of a discount in comparison to your peers?
For 1 or 2 years, yes, until we come up as a brand to the same level. And so we'll definitely bridge the margins. And in the exports, we expect that this year we expect to reach 12% of our sales from exports. And going forward, as we are able to build up our capacity, we aim to achieve 18 to 20% coming out of exports of the total turnover if once our Sanand Ahmedabad plant starts.
I also want to understand, because there's so much focus on the railways, right? And the government is speeding up their order wins over their order execution there as well. Can you quantify the opportunity that you are getting from railways and rural electrification?
Railways, major opportunity is from, platform rejig, then secondly, the suburban trains and metro rails. So far as mainline railways are concerned, most of the electrification is done by overhead traction. So the cabling demand per se is not very big, except signaling cables, which goes up in that. So that's about railways.
Okay, all right. Sir, thanks a lot for joining in, and have a great, FY24. Your stock has given very good returns in the last 12 months. The stock is up almost 80%. Been a big wealth creator, and management is quite confident that the business will continue to generate good results. Let's slip into a quick break. On the other side of the break, one of the other big mid-cap movers has been Raymond. Amit Agarwal, Group Financial Officer at Raymond, will be joining in to discuss the business and demand outlook. We will also connect with Ramesh Srinivasan, who's the Managing Director and Chief Executive Officer at Kotak Investment Banking, to discuss major trends in the M&A space. Stay tuned. Welcome back. Well, Raymond has been one of the big winners in the last 1 year, surging 90%. Among the small caps, has delivered the highest return since March 31st this year. Amit Agarwal, the Group Chief Financial Officer at Raymond, is joining us now to discuss their business outlook and how the demand situation is shaping up. In fact, you just saw the 12-month chart of Raymond, and you'll get to see the kind of returns that Raymond has generated. Amit, thanks a lot for joining in. Your last time when we spoke to you, you had mentioned that the demand situation was a bit muted, especially in the month of April and May. What have you seen since then? Has there been a pickup in demand? And if yes, across which geographies are you seeing a pickup? Where are you, planning to expand in terms of your store addition as well? If you can just give us a sense of what the next 1 year may look like.
Yeah, thank you for having me on the show. No, it has been a very good run for us. If you look at it, 22-23, we have recorded the highest revenue, highest profitability, and all of our business sectors have done very well, be it the lifestyle, be it the real estate, which we grew the business very recently. Now, coming to the current situation, we look the business across in the lifestyle. I think April, May had been a little muted because of the weaker demand. But still, if I look at the urban sector, at the sector in the tier 1 and tier 2, we have seen still a decent growth coming in. Now, the question is about the tier 4, 5, 6, which has generally the summer weddings, which has seen a little muted. And we expect that hopefully in the next 10 to 12 days, we see a slight improvement. But then after that, the monsoon, when it kicks in, then there is always a dull season for us. But we expect the festivities, which we should start delivering our products to our customers, franchisees, and so on from the mid to late August. I see a very good demand coming up because there's a good festivities around in October, November, as well as in weddings.
Sure. Can you give us, a little bit of more perspective, some numbers as well? You said that there are 200 stores that you're opening to focus on the ethnic business. This is what you said last time around, and 50% of these stores will have ethnic wear. Can you tell us, and of course this business, as we know, has high gross margins as well. What kind of revenue potential that do you see from these 200 stores? And in terms of margins as well, what could you generate?
So look, we are very clear that in the last year, 22-23, we have opened almost 65 stores. And this year, we plan to open more than 150 to 200 stores in the current year for the ethnic wear. We have also the plans for other formats, be the Park Avenue and such things. In this stores, because you have a certain stability time, you take a time to mature these stores. So we expect anything between 12 to 18 months to mature these stores. And the seasonal pick is very important. When the festivities come, when the weddings come. So we expect when it is at 12 to 18 months, we expect anything, the revenue coming out of these stores between 1.7 to 2 crores per store. So that's a kind of a revenue per store we are targeting to grow.
Amit, what should the total revenue from ethnics look like? You gave us per store, but what should the number look like? What was it, say, in the last year? And where is the number headed? Because you clearly believe there is big potential out there.
Yeah, so we had a very small revenue, around 70 crores in the last year. And we are targeting over the next 3 years to go anything between 400 to 450 crores.
Okay, all right. Amit, the other piece of the pie has been the real estate part. I recall a lot of investors were very disappointed when you'll say, hey, we're going to go ahead and develop it ourselves. But you've proved everyone wrong, actually. You'll have managed on the delivery. There's been good traction on ground as well. So kudos to you and the team on that front. But what's the way ahead from here on? On the real estate part itself, what could the sales volumes be or sales value be, say, for FY24 and FY25? And also, I just wanted to clear the air. What is the total, acreage that you have? How much of it is under development? And how much of it are you looking to develop or maybe sell out?
Good. No, thank you very much. I think real estate has been a very good area. And you see, I think we have come from a very different mindset because we have been a manufacturer and a brand player. So we come from that background where we believe very strong execution and the sales velocity. And to give you the perspective, in the first 2 projects, as we speak today, we have sold 80% of our total inventory. And if I look at it, the last year, we delivered a revenue of almost 1,000 plus crores on the reality side. And we have booked almost 1,700 crore worth of flat bookings have been done. which reflects very clearly that going forward, we will grow the revenues. Now, as far as the acreage is concerned, we have got currently under development almost 30 acres, and we still have 60 acres left to develop, which would translate anything between 8 to 9 million square feet. However, the journey is not just a monetization of the Raymond Thane land. It is beyond that. We have started already on the JDA project. One of the JDA projects which we have signed in Bandra East is going to start over the next 6 months in terms of the construction as we are working on the approvals. And we are getting a lot of good response from various partners who would like us to join them in a JDA development, which will be the big growth engine for our real estate business. So we look very clearly that in the 3 to 5 years, it is a very large business for us. And therefore, if you see, we have done also the demerger of the business of lifestyle and making a pure play listed entities for real estate as well.
So Amit, can you help us with a number? I think 3,800 crores is the total booking value that you've already generated. Sitting on this base, what can you do in the next 1 year? Over the next 1 to 2 years, what could the growth be?
I'm not going to give a guidance of 1 to 2 years, but I think over the next 3 to 4 years, we are expecting anything between 4,000 crores of revenue coming in from the real estate business.
And by when do we see 2 listed entities?
So I think we have already announced the demerger. We have already filed the papers for the stock exchanges and such things. It's a process and it is expected to be completed in the next 10 to 11 months. However, the demerger would be effective from 1st April 2023. So this particular year, you will have 2 listed entities, separate listed pure play net debt free companies.
All right. Good luck with that. Amit, thanks very much for that conversation and always appreciate it here on CNBC-TV18. That's the management of Raymond. I mean, the stock is the market's absolutely flat right now. Blinking red and green, 18,715 is where we're at. But market breadth is still very positive. 1,250 stocks are higher, and you got about 800 stocks which actually are in the red at this point in time. Now, with the market looking so buoyant, will investment banking activity pick up a great deal? That's basically the question that we are going to be asking. And this is an exclusive conversation with Ramesh Srinivasan, Managing Director and Chief Executive Officer at Kotak Investment Banking. He's with us right now. Ramesh, good morning. Great to have you with us here. Thanks very much for your time. Is this, just give us a sense of how give us a sense in terms of numbers, Ramesh, how this year has been panning out in terms of blocks and investment banking activity. What is this looking as compared to the previous year? And 2, will we see a lot more blocks, lot more monetization with markets and stock values at pretty much all-time highs in a lot of companies and a lot of businesses? Go on.
And I'll put this in context. So we had a muted first quarter of CY23. I'll start with capital markets. And then we saw 2 reasonably large IPOs, one from Mankind, the other from Nexus. Both received good subscription, traded up well. In general, that's good for primary markets. Additionally, if you take the last 3 to 4 months, particularly from March, we have been seeing close to $1 billion of sell downs, both by promoters and financial investors, $1 billion on an average every month. So that's also kept the markets active. In my judgment, first talking about the outlook and the primary markets, I think companies which have demonstrated profitability track record have got good growth prospects. I actually think there is a window available for them to get listed. However, I will caution that investors are expecting healthy discounts, so that has to be kept in mind. And I expect the sell down activity to continue to be quite robust. This is the question you asked. Many institutional investors, both local and global, are actually preferring to stay with companies with listed track record as opposed to new IPO bets. And if you look at the sell down of close to $6 billion that's happened in the first 5 to 6 months of this year, 1.7 billion have come from promoters who have done the offer for sale to meet their minimum public shareholding or delever themselves. And the balance have actually come from financial investors. I want to underscore the point of sell down by financial investors. This is important on 2 counts. One, this is also building to the liquidity of the capital markets on these stocks, which is very critical for a great market. And secondly, to the extent that they're able to divest and gradually monetize their holding, it also spurs them to do more investments. So in a general way, if you notice, this is pretty much the trend that we see. I expect, I'll just take a second more, a little longish answer. Please bear with me. I also expect QIP issuances to happen maybe post the elections, some of it maybe before. But if you recall, 2020 witnessed a record boom in QIP issuances from the financial sector. And in addition to the financial sector, I expect real estate, consumer, healthcare, and infra to be active as far as the primary markets and general sell downs are continuing. And last but not the least, I was looking at the data for calendar 22 to today, and 26 of the 35 IPOs are in the green, giving returns to investors, which is very critical for a robust market. So all in all, I expect that it's going to be a gradual uptake. There's a lot of documents which have been cleared waiting to happen. And as we see the bottoming of the rate cycle and people get comfortable, new money will also come into IPOs.
Okay, since you said the word IPO a couple of times, I just want to take that discussion forward. There's been some good success up until now this year, right? There's the Mankind IPO, you had the Nexus REIT as well. Do you see a big primary market revival? And if yes, what could the quantum look like in this year for the rest of the calendar year? And, where are your sights set now?
So I would answer this in the following way, that Mankind, Nexus, and a few other IPOs were necessary catalysts, but probably not sufficient catalysts for a runaway primary market. So I expect a gradual uptake to happen. In fact, you will see some IPOs are already starting to get announced. So they'll be in diverse sectors. So we see an active market much better than last year. But if you ask me, will it be like 21 a runaway market? Not yet. I think we are some time away from that. And it will be across diverse sectors. And over the next 1 to 2 years, we also think another trend that you will witness is many of the companies going public will also get new money as opposed to just offer for sale. So it will be a steady uptake, but not a runaway primary market that we may see in the coming 1 to 2 years.
All right. Morning, Mr. Ramesh. Nigel on this side. Since you mentioned 2021, the last time this IPO market got garam, so to call it, we had all these new age companies that came in there. And then, in fact, we had a bit of a drawdown on the index as well as on a lot of stocks. I just wanted your view on this new age companies. Is there interest being seen now? Some of them have come off half. Some of them are a third of what they were. Any view on them?
Actually, in the sell down that we expect to see over the next 1 year, my view is that, from growth, which was the theme in 21, investors and the markets have shifted their focus to profitable growth. So in the new age internet companies which have some paths to profitability have a game plan. In the sell down that you expect to see in these companies that got listed, you are likely to see good investor interest in the sell down that happens. And if I may just shift the conversation from the listed internet space to a little bit to the unlisted space, well, on the surface, it appears that there's a lull. Actually, there's a reasonable amount of action going on in the internet companies in general. I think companies which have got efficient capital, don't have too many shareholder complexities to resolve, are companies that are likely to succeed. Secondly, we are also witnessing conversations on M&A, particularly in the mid-market space in these companies, because they're all looking at how best to consolidate and survive. Secondly, companies have also realized that, look, they have to get a clear path to profitability. So they are working game plans to shed their SG&A fat. The other trend that is very interesting that we should all watch out for is that over the next 1 to 2 years, I expect B2B models to get listed. It'll be interesting to see how markets receive them, how well they do, and how do they get valued. So all in all, I would say that in the internet space, below the lull, there is a reasonable amount of activity going on, both on the listed as well as on the internet, on the unlisted space.
Just news from overnight, Ramesh, that out of Europe, there is a new 4-week-old AI startup, which has got 100 million euros in funding. The largest amount of seed funding in Europe. Will be any AI companies in the pipeline here?
I think there are early stage AI conversations going on. So you will see next year or so that they'll all get funding, clearly even from India or Indian origin.
Okay, got it. Just one more point. I don't know if you have a view, because you speak with investors of all hues and shades. This entire sort of, ditching China and looking at looking outside. We kind of highlighted this, I remember, last year. But one is starting to hear a lot more around this. I mean, Sequoia, I think there was one other large fund. But is that something you hear quite a bit as well? And so we'll see those investors coming both in the primary and secondary markets?
So, I won't comment on anything specific, but I'll say that if you look at from a secondary market perspective, Jan, Feb, March, there was a reasonable amount of China trade because the valuations were very attractive. India, continuing to be an attractive destination, but investors have always commented that the valuations are always a bit stretched. So I would say that if you look at, in context, the China trade today over a few months back, probably the interest has slackened a little. If you look at the FDI inflows into India in recent months and recent weeks, it's been robust. So with the sell down, the IPOs and the interest that FDI investors are showing, I think that's keeping the market stable. So really, that's the context on which we should view the question that you've asked on China versus India.
All right, we'll leave it at that, Ramesh. Thanks a lot for joining in. Appreciate your thoughts. Well, let's do one thing. Let's slip into a quick break. The market is very flat. There's nothing much that's happening right now on the headline index, at least. The Nifty is just hanging on to 18,700 by the skin of its teeth, and the mid-cap index is very quiet as well. Mitesh Thakkar will be back with us on the other side for some technical trades, and we will also talk about some stocks that are in focus. Persistent Systems has seen a downgrade from JP Morgan. More on that in a bit.
Okay, welcome back. We got the market, which is flattish, 10 points lower, 18,707 on the Nifty. But broader markets, there is still a fair bit of activity, and advances to decline ratio is in favor of gainers. Mitesh is with us with a quick check on things. Mitesh, hi. Morning again. On the Nifty, what's the call now, and will we see any large action today? Or you think it'll be quiet because, I mean, later we got a big event, which is the Fed decision, and your trades now?
I think talked about taking profits on the rally closer to about 18,800, and we got a high of around 18,755. But what we have done is that given the fact that the Bank Nifty is looking marginally weak, We've trailed our stop losses to about 18,675 on the Nifty spot. So, let's hope it doesn't get triggered. We also slightly overbought on the daily charts now, so I'm mildly worried. But I think, only now about 18,820 will I go aggressively long on the indices. But on the stock side, still trading with long bias. I have a buy on Vedanta. In fact, the metal index is recording a very good breakout. Vedanta has given a good, price volume action on the first hour chart. That's a buy with a stop just below levels of 277. Looks for targets of around 295 here. And the second one is JSW Steel. Disclaimer that we have some call options positions over here, so I have a vested interest. That's a buy with a stop below levels of 760 for targets of 805.
Okay, by the way, the real estate space is once again on fire. So you have something like a Puravankara, which is up 5.5%, and so many real estate stocks actually doing well. But what I'm also looking at this morning, and Mitesh, thanks a lot actually for joining in and giving us those stock ideas. On the downside today, you have Persistent Systems that's under pressure, and we've been talking about that ad nauseum through the morning. JP Morgan has downgraded Persistent Systems to an underweight. They have a target price of 4,100, which is a big downside to where the current market price is. Now, they say they've in fact cut the FY24 earnings estimates by 3%. They've cut FY26 earnings estimates by 4%. They are saying that there are revenue cuts expected. There is higher exposure to discretionary spending, and they feel that clients could either cut down on discretionary spending or defer their expenses, and that could hit Persistent Systems quite a bit. In fact, overall, they are quite, negative on the IT sector. Their view is that every IT company will disappoint in the second half of this fiscal in terms of growth parameters, and they're placing emphasis, TCS and emphasis on a negative catalyst watch. So overall, they are negative on the sector, and particularly on Persistent Systems, they've downgraded the stock.
All right. Ekta is now standing by with details on Ipca Laboratories and why that is in focus. Ekta, over to you.
Hi, thanks for that. Well, yes, interestingly, Ipca's Ratlam facility, which basically manufactures API, was inspected by the US FDA from June 5th to June 13th and has been issued 11 observations by the US FDA. Now, remember that this particular plant, along with two of their other facilities, which is basically their Piparia facility, Pithampur facility, and now the Ratlam facility, they all have been under import alert since 2015 for Ipca Labs. So they haven't really been manufacturing for the US markets from these facilities since 2015. Now, just recently, their Piparia facility, which is in Silvassa, was inspected from the 18th to 26th of April. They were issued 3 observations at that point in time. That particular plant manufactures formulations. 11 observations generally means that, a facility which already has regulatory issues such as an import alert, and over that 11 observations doesn't read too well. The assumption is that it's probably going to take a longer time to solve for the company and probably even lift that import alert. But remember, for Ipca Labs, they haven't had these facilities factored in since 2015, and hence the street is giving them a valuation beyond the US business. They did acquire Unichem's international business for this particular reason, because they would get access to the US markets through their manufacturing facilities, and hence in the larger scheme of things, these 11 observations, while we don't know the details, might weigh but might not weigh as much, because in any case, the worst is probably factored in.
Right, thanks a lot, Ekta, for that. Well, KEC International is the other stock that we're looking at this morning. Vivek is here to give us more on that. Vivek.
Well, good morning. So KEC International, the stock is buzzing. So today the company has gone ahead and given a press release where they've highlighted, the number of new orders that they've received across various businesses. Total ordering is over 1,370 crores. Now, the order breakup is within the railway space. They've got orders for the automatic block signaling system and overhead electrification. Within the civil segment, they've received orders for both residential as well as commercial building segments. And even in T&D, they've received substantial orders for a 400 kilovolt transmission line as well as star supply both in India as well as USA. Now, when you're talking about the order book of KEC, at this time around, it's actually at an all-time high. At the end of FY23, the company said that was well over 30,000 crore, and that is something that augurs quite well as far as KEC is concerned.
All right, thanks a lot, Vivek, for that. Well, that is on KEC International. Just wanted to mention, as I was telling you folks, there is a big move that we're seeing right now in the real estate space. In any case, most of these real estate stocks are at 52-week highs, and this morning as well, Something like a Puravankara is up almost 5%. Prestige Estates is up 3%. It's been rallying day after day, and this month already, not even 15 days of June are up, and Prestige Estates is up 23%. So that's been the kind of move that we've seen in this space. And then you have a couple of others. Ramkrishna Forgings, they've just won an order. That stock is at a fresh 52-week high as well. And Trent, Abneesh Roy was talking about Trent. It's one of the favorite stocks of Nuvama. That is at a fresh 52-week high. The stock has rallied almost 30% in this year, in 2023, that is. So lots of big movers. Don't be fooled by the headline index, which is absolutely flat. There's plenty of action beneath the surface. Let's slip into a quick break. On the other side of the break, our special segment is the economy. My colleague Lata will be joined by Rajkiran Rai, who is the MD and CEO for National Bank for Financing Infrastructure and Development, to discuss the big infra push in the country and the national infra pipeline.
Welcome to It's the Economy. We all know that's the only happening sector in terms of capex is infra and government capex. So let's talk infra financing. The NABFID, or the National Bank for Financing Infrastructure and Development, was set up in April 2021 to focus on addressing long-term financing needs of the infrastructure sector. It was expected to bring special talent to not just structure, to advise on financial structuring of infra projects. It was also expected to work with governments and multilateral agencies to debottleneck permissions, and a third big role for them, deepen the bond market to fund infra. Joining me now is the recently appointed first Managing Director of NABFID, Mr. Rajkiran Rai. Good morning, Mr. Rai. Thank you very much indeed for joining us. Well, I know you've just taken over a few months back, but if you can tell us what's happened so far in NABFID.
Yeah, I've taken over in August. Before that, the board was constituted actually with the appointment of Mr. K.V. Kama. So they have quickly put together a team on deputation from various banks and started putting the policy guidelines together. So I took over, I started building the credit team. So with that, actually in December, we did the first disbursement. So as I'm speaking today, we have more than 50,000 crores of in-principle sanctions, close to 25,000 crores of final sanctions, close to 15,000 crores of disbursements. And we also have a pipeline of another 25,000 crores is under process for in-principle sanctions. So it is a good takeoff on the credit financing side. On the developmental agenda role also, we have already signed a MOU with IFC for transaction advisory services, where we are creating a corpus of 10 million with equal contribution.
Okay. So you have already disbursed or in the process of disbursing about 1 lakh crore?
Yes, actually the expected number of sanction is about 1 lakh crores for 24.
Got it.
Out of that, the book, actually outstanding book will be likely 60,000 crores because in infra disbursements take time.
Okay, what are the kinds of projects? Is it roads, rails, hospitals, what?
Actually, road and energy occupy the major space. Otherwise, also, like, this is where the maximum action is there. So on the road side, actually, like it's the maximum where our sanctions are happening. Plus the energy, both generation, transmission is a major area. In addition to that, we have city gas distribution, data centers, or the new areas where fresh financing is happening.
Okay, how much of this would you say is the private sector? Of this 60,000 crores you've already lent, or the 1 lakh crore that you intend to lend, how much may the private sector account for?
Actually, private sector will be major. Actually, initially we started with some PSU exposure as we were building our team. But now since the team is in place, it is mostly the private sector. Some of the PSU lending will be there, but then I can say the mix of sanctions will be around 70-30. 30 for
so
the
you're not lending to...
And, 70 to the private space.
You're not lending to NHAI types. You're lending to the private road builder.
No, NHAI InvITs are... actually, NHAI is not directly borrowing now. So it is the NHAI InvIT. So I will not take it as a, PSU space that way. Because NHAI InvIT comes with a lot of private equity.
Okay. All right. Mr. Rai, now, the government is intervening in infrastructure in 2 or 3 ways. In 2006-07, was it? It created the IIFCL. And then later on, I think 2014, it created NIIF. And now it is NABFID. How are responsibilities divided between these 3?
NIIF actually is created totally differently. It is the 49% government and 51% private. Actually, this is construed differently and it is more for the equity. See, when we talk of infra today, one of the biggest, requirement is the capital side. Actually, as the companies which execute these infra projects, as their order book is growing, they need more and more capital. So I
got that, sir. Now, NIIF gives the equity portion and NABFID gives the debt portion. How do you all...
We are permitted to do equity. Actually, that way NABFID Act is a big enabler, actually looking at all the gaps it is done. So we are permitted to do equity, but as of now, we are not built that capability. Now, you are part of the other question. IIFCL is created as NBFC. See, everybody plays their role. IIFCL also has played its role. But then over a period of time, as the system is evolving, government felt that we need a complete holistic approach for infrastructure financing rather than a piecemeal approach of approaching it in parts and parts. So I think that's why the NABFID is created.
Okay. No, IIFCL does credit enhancement. They were also interested in creating a bond market at some point in time. Therefore, I'm asking, how do you all see the distinction between yourselves and... I think they do even take out financing after a project is done, which kind of resembles InvITs in a way. So, do you all do more or less the same thing?
No, actually, NABFID, the way we are acting, you can make that difference because we are more of very holistic infrastructure finance institution. Like the way we are connecting to the multilateral agencies for not only, finance side, actually it is on the transaction advisory and other knowledge sharing. Actually, we are working with many of the multilaterals and the DFIs abroad to bring together the best practices abroad here, because infra is growing many-fold in this country. We need all that technical know-how also. And on the credit enhancement side, I just want to elaborate. Even though IFCL did 1 or 2 structures, there are some regulatory issues around partial credit enhancement, which we have taken note of and already taking up, because policy advocacy is also one of our roles. So we need to bridge those gaps. Actually, when these regulations were made, infrastructure financing was in the very initial phase. The first guidelines came in 2015. Now we are in 23 and the ecosystem has evolved. So the regulations also have to.
Okay. No, that's a fair point. You would be working to even coax government, central and state, to change their policies, is what you're saying. You spoke to us a little bit about your asset side, about the 60,000 disbursed and a 1 lakh crore waiting to be disbursed. Can you speak to us about the liabilities side? How much did government fund you? How else are you raising money?
The government has already given us 20,000 crores of capital and 5,000 crores of grant. We are hitting the bond market tomorrow for raising 5,000 crores plus 5,000 crores of green shoe. And we'll be raising main liability by way of, there are three ways we are looking at it. One is the bond market, another is the credit line from the banks, another is the multilateral borrowing. So we are, depending on the, the interest rate scenario, we are going to blend it so that we keep our cost of funds the lowest. So we are expecting to borrow about 30,000 crores from the bond market this year.
Okay. What would be the cost of finance, sir? Because when I read the NAPFID note, you'll have a bit of sovereign guarantee. So would financing be cheaper than, say, an IIFCL, or cheaper than if you took, bank finance, if it is available at all? Banks are not interested in infra these days.
You can't say that. Banks are doing infra, because this is on the corporate side, actually, if you look at it, it is only the infra lending which is happening, because whether it is HAM projects or transmission lines, all the banks are very actively doing it. So you can't to that conclusion. So the cost-wise, actually, tomorrow we'll do the price discovery once we issue the bond market. But looking at the similar players, we expect that it should be about 25-30 basis point above the 10-year GSEC. So initially we are coming with the 10-year GSEC. Actually, we need to look beyond what is presently happening. You need to see the pension funds and the insurance sector growth in this country. Now, all the foreign insurance companies and other equity funds, they're coming and buying infrastructure assets in the country, left, right, center. So there is a huge investment coming in all operational assets, be it InvITs or a straight buyout. So insurance funds, because their liabilities are 20-year plus, they need long-term assets. Actually, particularly in India also, the insurance sector is more than 60 lakh crores AUM and growing at more than 20%. So the point will come where the Indian insurance companies will also start buying these assets. So the system is changing, and my fundraising actually is more smoothened by this. Coming to cost of funds, actually, again, we are blended, because multilateral borrowings, the government, as per the Act, has given me a sovereign guarantee at 0.1%. So this is going to make our borrowing much cheaper. So as a blended cost, actually, we expect that our cost should be something like 7.5, 7.6 kind of thing. And,
you said 30 basis points over Government of India. That's like as cheap as it gets. Mr. Rai, how do you look at the credit demand? Now, if you have to tell us 12 months ahead, what will be the rate of growth of financing of infra? Is it 15%, 20%, 25%? How is it looking now in terms of appetite?
I'll give you some numbers. Last 5 years, the total spending on the road, both private and public spending, was 13 lakh crores. We are likely to spend 3.7 lakh crores this year. It is 28% of last 5 years spent. More interesting is railway piece. Railways is expected to spend 2.4 lakh crores this year. Last 5 years, they have spent only 4.9. So it is 49% of last 5 years spending. Similarly, on the power, actually last 5 years, it's about 11 lakh crores. This year, it is expected to 3.12 lakh crores of spending, which is 29% of the last 5 years spent. On the solar side, we added 12 gigawatts last year. We are expected to add 20 gigawatts this year. On the road side, 10,000 crores of 10,000 kilometers almost allotted. 12,500 crores is the plan. Kilometers is the plan. On the transmission side, almost 2.5 lakh crores of investment is in the pipeline. So, and about 84 HAM projects worth about 80,000 crores are getting completed in a year or two. which creates that opportunity for the InvITs and other transactions to come in. So looking at these numbers, this year is going to be really big, and the coming years are also going to be very big for infra. So you can convert it to the percentages, but then the growth in infra, particularly on the private space, is going to be huge.
No, it's absolutely. I mean, from the numbers you're saying and you're comparing it to 5-year averages, so you have smoothened it for COVID as well. You're speaking of at least 25 to 30% annual rise. That's how it's sounding.
It is around that actually. That's why the private sector has to pick up, and the execution capabilities also have to pick up. So we need to create that enabling atmosphere here.
Okay, that sounds very interesting, sir. We had the IIP data come out 2 days back. That also showed a 13% rise in infrastructure output. It was the best performing of all, consumer durables, intermediates, basics. Of that, infra was the best. So it does look like it's firing on all cylinders. And if the money is ready, nothing like it. Mr. Rai, this was just an appetizer. Thank you very much for giving us an idea of what are the initial steps NABFID has taken. Very impressive numbers. I wish you put out a press release. That would really help. Thank you very much for joining us. The sense is that clearly infra is on the uptick, and the government is able to expand it with its agencies like NABFID. I mean, if it's a 20-25%, then I think it's extremely impressive. Watch this space. We will get the likes of Mr. Rai again to explain how infrastructure and infrastructure financing is growing. The moment the markets are a little unattached to all this, undistracted by all this, they're waiting for the big event, that is the Fed FOMC meeting. We will know the decision only by midnight today. So tomorrow will be a more interesting day. Thank you very much for being with us on this edition of Bazaar. Chartbusters up next.